But anyway, we're here to discuss how crypto will shape the future of the financial system, banking in years to come. Yesterday we talked a lot about tokenization. Martin did a nice summary right now about tokenization as well in his pitch, not his pitch, but his, well, I guess it's a pitch.
It's a pitch for the decentralized autonomous bank.
Yeah.
So it's for the ecosystem.
Very good. So I think that I think to start, just to get let's have everybody introduce themselves first, and then we'll jump into to the first couple questions here. So we'll start on the end.
Okay, so basically I'm Brian McCabe. I'm head of product marketing at Paxful. So I have been quite eagerly listening to these guys' talks today. I'm going to probably have more of a marketing perspective on what we say, but yeah, let's continue along the line.
I'm Taha Sajid. I'm a technology consultant at Huawei Technologies, and also I'm a trainer. I provide blockchain fintech trainings, and also I'm a chief operating officer of a Saudi blockchain company. Thank you.
Well, I'm Tobias. Probably a little bit more about my background than I did in the presentation. So since almost 2 years, I'm the CEO and co-founder of Satoshi Wallet. Before that, I've spent all of my life in banking. So the last 8 years, I've been working for Credit Suisse in Zurich. I was heading a department which is called Digital Channel Management. So I was responsible for online banking, mobile banking, customer relationship management systems. Well, and then 2 years ago, I changed to the right side of the force.
Depending on what side you're on, I guess.
Okay, I said it before, I worked 10 years for Credit Suisse, as well in Zurich, so we know each other from Zurich, from Credit Suisse, and then I decided to do something really meaningful.
Perfect. So just a quick one on me. I'm Kevin Murcko, CEO of CoinMetro here in Estonia. Yesterday I gave a presentation on CSD, so that's basically infrastructure. It's about tokenization and opening up settlement cross-border globally. And I have something called the ECA, which is a lobbying group. So I talk to a lot of regulators and a lot of people in different industries about what blockchain is, what crypto is, how to regulate it, how to apply current regulations to these financial systems that we're building, et cetera. So I think the first question I asked, so everybody's on the same page. And I know the word bank isn't necessarily in the subject, the title that we're playing with here, but let's define what each of us, what the definition each of us has, and we have two bankers on the panel, so I'm sure their definition will be clear, tight, and precise. But what is a bank? What is the bank? Because banks are the gatekeepers to the financial system we currently have for the most part, for most people. So define what is a bank in the most simplest way you possibly can.
I guess I could say a bank is, for me, what I would call like a clearing layer. So it's the process, institution, it might be an application that basically allows the transmission of value from one person to another. Well, some of them can be quite free, open systems, and some of them can be quite closed and perhaps under scrutiny, depending on what country or part of the world you live in or political system you come under. But generally speaking, it comes under this like broad transmission of value.
Yes, for me, bank actually provides financial services, but takes the money and actually makes the money out of it. And if you're giving the money or putting the money into the bank, they are also doing the business with that money. So it also providing service to the consumers as well as making out of the money from itself. And from that money, it provides like different services like insurance, lending, all of these things. And so that's how I define what bank is. But usually it stores value of the customers and then plays out of that money.
I'd like to start with a quote of Bill Gates. He said several years ago, we all need banking, but we don't need banks. So I'd probably say, what do you understand with banking? Banking is, well, the counterpart of trade flows. So it's money flows, which are absolutely necessary for economic wealth and trade, because trade generates economic wealth. So we need banking, but we probably don't need banks.
Okay, and my point of view, the banks as such, as we know it, the first bank was created in Netherlands, Dutch Westland Handelsbank, and it was something like 1600 something. No, but the economy worked thousands of years before, successfully. Okay, we had Renaissance in Europe, we had Hanse cities, we had very many trading networks, everything worked perfectly. And then we started this phase where the commercial banking started, when the central banking started. But let's think it again, 4,700 years long, we didn't have any commercial banks. Everything worked without the banks. So just to answer your question.
Perfect. All right. Well, wasn't necessarily a question, but thank you for the definition. I think everybody's kind of on the same page when it comes to defining at least what a bank is today. Again, gatekeepers to the financial system. So the way the financial system has worked, at least in modern times, is that there's been gatekeepers. There's been someone at the door that lets you in and can close the door on you pretty successfully as well. So I think you touched on it, Martin touched on it in his presentation. You just touched on fractional reserve banking, right? So fractional reserve banking is what allows a bank to loan out 10 times the money that they currently have on deposit, right?
Actually, in Europe, 100 times.
Yeah, 100 times. Well, there you go, 100 times. Look at that. So they can create money out of thin air, kind of like we did with our ICO bubble, right? But so that's how banks can be gatekeepers and control the majority of the financial system as we see it today. Question is that if you look at innovation, in terms of innovation, if I look at a broad scope of innovation in the financial industry since 5,000 years ago up until today, one of the major innovations is fractional reserve banking. It allowed banking to scale, right?
Okay.
What's up? I was looking for a head nod, but that's fine. So it allowed banking to scale to a more mass populace, create a credit system that obviously tied people into debt. That's another topic. The question is if moving from the system we have now, are we looking to replicate this same type of system and simply put it on a blockchain? Is that where we're headed for history, or are we looking to actually revamp this system that we've had now in modern times?
Okay. To answer this, if I may, let's look in the time in the history before the Federal Reserve was created in U.S. How did it work? We had a gold as a base money, non-manipulatable. And we had a lot of private banks, every bank creating their own private credit money. So that's how it worked. Now, but what was very interesting during this phase, it was a deflationary phase. That means every saver got richer every day. It was factors richer, not 10%, 20%, I think in 40 years, like 3, 4, 5 times richer, all savers. Now, if you're speaking of fractional reserve, okay, Mario says hello. If you're now speaking of fractional reserve system, we have to separate these two parts. There's a base money and there's a credit money. Now, the problem in a current fractional reserve system with the base money is not gold. It is not something, it is manipulatable. That's the problem. And the second problem is this EU and American regulations which allow so high leverage. Let's think again, US 1860 till 1910, booming economy. The fractional reserve was maybe 2 times and the gold-backed money. So it's cool. So we have to go back to the history to look how it worked before. And this is the answer. Oh, sorry.
But so the more poignant question was in how we're looking to shape this future with crypto, how we're looking to shape the financial system. Are we looking to mimic that same system where we have and is this credit money that's basically created out of thin air? Or are we looking through this decentralization to create a system where we only are crediting money that actually exists that's asset-backed one-to-one? What is, yeah, that's the question to you.
Okay, we have to look on the credit money. That means money which is created during the lending process as a key innovation of humanity. Now, the hardcore Bitcoinistas, maybe there's some in this room, they say, we do not need credit money. Actually, I say 5,000 years long, people had credit money. And they were very happy with this. It's a key innovation. So it's not about do we need credit money or not. Yes, we need it. No, but what we need is a base money to be non-manipulatable, as it existed before the Federal Reserve. By the way, Switzerland was the last country to move away gold backing for base money. It was 1992 when Switzerland unfortunately became a member of the UN, United Nations. So they had to sell half of gold as well. But to have base money, non-manipulatable. And in a crypto, we have it. Bitcoin, Ether, Litecoin, non-manipulatable. So, and on top of this, we can have either decentrally created credit money or we can have a private credit money as it existed in time before Federal Reserve.
So you don't see the leverage as a problem?
Leverage in the current system is clearly over-leveraged. This is clearly over-leveraged. There will be an event of a cleaning event. We don't know where this event is, but it will come. Now, but what is the problem in the current system? There is no clear separation of base money and credit money. In all history, 4,900 years, before central banking got so strong, there was always, if you had a loan, you had to pay it back in a base money, not in a credit money. So there was always reversal into base money. There was a clear separation, base money, credit money. The last 100 years, we have this system, just credit money, fiat money, it's just a mix. No one understands how it's actually working. It's so confusing. So the system has a flaw in a design, and one way to fix it is always to go back to the base money.
If I could
Anyone else?
follow on from your point a bit, actually, what you said was quite interesting, but if we were to talk about how crypto will start to shape this and move away from old systems, it does seem like we're finally reaching a point where we're starting to have a system or a mechanism to build this credit money on top of, if we call Bitcoin or crypto, the base money. So one thing which we're possibly still lacking in this space is a way to, like your presentation said, to decide who's worth lending to. How do you decide whose credit is good on the blockchain? Because you can be a dog on the blockchain, no one knows who you are. So this systems where we can basically perhaps assess someone's risk score if they've, yeah, exactly. These kind of modules which might come in third-party providers. Right now, most people are outsourcing KYC and all this sort of, you could say, risk assessment systems to various companies. And maybe there's 100, 200 in the space right now, but maybe we start to see the KPMGs of, I don't know, auditors of individuals or whoever this might be, become sort of prominent in the space. And then we get a mechanism where we can start to build credit on top of crypto, because right now there's certain very rudimentary kind of projects like this where you can perhaps get 25% credit on assets that you've put into a platform or whatever, but this is just all very rudimentary based on the very limited data we have on the people. So I wonder how this is going to work in where we start to have credit scores, risk assessments, and this stuff which will carry across the blockchain.
Oh, okay, jump again. So actually in our system, we have a credit scoring mechanism implemented. So there are multiple ways to do credit scoring now, but let me add a little bit from the legal point of view. The current law is writing to the banks how they have to do a credit score. They need an employment document, salary certificate, everything. It's written in the law, the documents are listed. It's fun. Now, but there are many other ways to do a credit scoring. There are many alternate ways, but all these 23,000 banks in the world, by the law, they are built to this traditional salary statement and this kind of credit scoring. But there are alternates. We are using one alternate.
But if I can jump in for a second, if I could say one place where the tech fins, like you talked about, are kind of jumping ahead of us right now, it's in this credit scoring. Because even if I think from a marketing perspective, I have a Facebook ads account, they already do some rudimentary credit scoring on me. They say, okay, because you paid your bill of 2,500, we'll let you spend 5,000 this month. And they're already starting to build in their own sort of third-party ways of scoring credits. It could, if you move to China, you have their social credit system, which basically works through all aspects of life. And there's still the case where if you want to rent a car through some of the Chinese platforms, they will check your credit score through Alipay, perhaps, and they'll say, okay, you don't have to pay a deposit, but you do. And I would also see that there's a potential, I would see, for a lot of risk, which is why I hope crypto will keep these systems in check, because it's always going to be the alternative that you can go to if someone shuts you out of one of these systems.
What I hear a lot, and not just from this panel, just...
No. Oh, I'm on mute? No. I just wanted to probably bring one more high-level view on that. So, I mean, if we're replicating the old system or not, economy is not a strict science like math or physics. So economy is more like trial and error. So you try something, and if it works, you keep it. If it doesn't work, you try something new. So currently, it looks like the things that we tried in the last years seem to be messed up because we have a credit bubble. Now, the good thing that comes with crypto is that until the invention of Bitcoin, we had a monopoly on currencies, and the monopoly was with the state. So there was not much room for trial and error because, well, you had to do what the state decided because you had a monopoly on currency. Now, with the invention of Bitcoin, the first trustless architecture, this monopoly is broken. So now we have a lot of currencies. So we have deflational currencies like Bitcoin. We have inflational currencies like Grin, Mimbo, Wimbo, whatever. And now we have a competition, and we have a competition of ideas. and we're going to see the Darwin-like process. So we're going to see probably the competition of the fittest. And we do not yet know which idea is going to win. But this is a very, very interesting experiment, because at the first time we have a really competition of ideas on a monetary market, and this might lead to completely new models. And it's going to be very exciting to see what the future dominating currency will look like. Either is it a replication of what we have, or is it something which is probably non-inflational, even deflational, something you never tried before. So that's, well, we have to sit back and watch it. It's an interesting experiment.
It's a good point. It was exactly what I was about to lead into, in that, so everything I hear, not just in this panel, but when I speak to people, my own views are included there as well. Most people in the financial sector tend to believe that we're going to build, or we are going to start to build systems that replicate, at least to a certain extent, the current financial system. Because you go outside of those boundaries, whether because of regulatory, whether because of laws, or whether it's simply because people simply don't want to take the risk, or the risk starts to heighten as they move outside of that ring fence. So with the scope of this panel is the new financial system. But for the most part, what I'm hearing is that it's the old financial system built on top of a new vehicle, which could be a protocol like blockchain. It could be a DApp like Bitcoin, or something built on top of the protocol. But it doesn't seem like, and the question is, should this panel then be called, how will regulation shape the new financial system, rather than how will crypto? Because for the most part, we have to, when we talk about regulated financial services, now you can go through loopholes and say that MiFID II hasn't classified Bitcoin as a financial instrument and it hasn't done this or that, but eventually regulation will catch up. They take their time, it will take time, it always takes time, but eventually regulation will maybe catch up to where we are today in 2 or 3 years. Maybe it takes 18 months, whatever it takes, it will catch up. So at the end of the day, are we discussing the wrong thing? Should we be more focusing not so much on bringing products to light that are basically mimic what we already have? Maybe they cost less, maybe they're slightly faster, maybe they're slower, maybe they add some trustless layer, which is good for certain products, for sure. Or should we be focusing on actually looking to change the underlying legislation, the laws, that allow us then to actually create something that we all probably envisioned in the beginning, like the Bitcoin white paper, for example, true decentralization, trustless systems, pulling out the middleman, disintermediation, all these good things. So are we just talking about the wrong thing? Should we be focusing in other areas, or should we be building products based on what already exists by simply making a few things like slightly better, rather than focusing on making the whole better?
Yes, I agree. I agree with what you are saying. We are normally looking for a broader perspective, like there are so many use cases that. So what I feel is that we should be focused, we should be prioritize our use case, that what exactly change that we need to do it, and how the users can benefit from that change. If we talk about or if we think from a user's perspective, then we can precise, or we can focus in our pain points. And just to add on, he touched a point about the regulators. So the regulators also needs to be educated, like why they need to enforce some policies, or what laws they can amend. So the regulators needs to be change some laws, and also need to educate the regulators to be able to have a good ecosystem.
And the legislators, because they're the ones that write the law, right? Regulators just enforce them. So.
Yeah.
And we talk a lot about regulators, but actually it's really legislation that we need to change. So anyone else want to?
Yeah, I mean, let me bring a second quote. The Nobel Prize winner in economics, Hayek, said in an interview in the 1990s, we're not going to have sound or good money before we take it out of the hands of the government. And as we cannot take it out of the hands of the government violently, we have to find a way to slide around them with something that they cannot stop. And this is Bitcoin. And it's decentralized, and you cannot stop it. So, and I mean, that is the reason why Facebook will never be successful. There's a CEO whom you can catch, to whom you can place some regulatory requirements, but luckily there is no Bitcoin CEO, or there is, for all the other decentralized blockchain, there's no CEO. And that's the way where you can, well, somehow try new stuff, and to a certain extent do that without the regulators being able to, well, pull the plug out of it and stop you.
Yeah, for sure. All right, somebody liked that comment. That's good. We got one guy that likes disintermediation and decentralization. That's good. Okay, so
No, just, I mean...
If I can just move away from your point just a small bit as well. One thing that I've been made familiar with quite recently and after traveling around Africa is that actually regulation doesn't touch a lot of people. Like maybe where we are here it does, but if you go to like Kenya or you go to like Nigeria, the financial systems are in many parts run by private companies already. Like you have MTN, they have mobile money, everyone transacts using that. Your only identification there is a phone number. So like, it might not necessarily be that you're always talking about state money. I think this like, crypto might actually be more in part keeping like private money in check as well.
And maybe just to add, okay, like all history of the humanity from 5,000 years ago till 100 years ago, there was a monetary competition. There was a monetary competition between different base monies, and there was a monetary competition between different private credit monies in the last phase. Now, but now we have entered the phase where this monetary competition is kind of missing, which means as well the evolution is missing. Competition leads to the evolution. So, and I hope we will get back to the phase where we have again monetary competition, like because one Mises saying, money is what people use. There has to be competition in different monies. So I answered your question a little bit indirectly, but...
I noticed you do that a lot, so that was good. I got it though, that was good. I do that as well, so that's good. Okay, so we're obviously talking, we just mentioned monetary policy. So obviously our current financial system, and this is I'm gonna dumb this down almost all the way to the floor, but essentially we have two buttons, right? It's inflate and deflate. That's how modern monetary policy, at least from a super high level, works. So are we creating a system, if we create a deflationary system for base money, right? If that's the goal, at the end, to create a deflationary system. What happens then in terms of a global crisis, especially when the globe is using one single deflationary currency that necessarily might not fit into, let's say, local economies, things like that? How does a completely decentralized system without a centralized monetary policy, how does that actually function? What happens during times of crisis?
Can I jump in and just to say, okay, we know the gold-based system. Now, gold-based system was a voluntary system. There was no central bank, there was no IMF, there was no army power. It was a voluntary system where states joined with the gold-backed system. And on the top of the gold-backed system, it was 55 years voluntarily using gold-backed system. So, and gold-backed system, gold-based system was deflationary system. Why deflation? Because humans always create productivity, they're getting more productivity, produce more in the same amount of time, and so there's more wealth created in the same unit, with the same unit of resources. Very simple. And this system existed nicely 50 years, voluntary. So, deflationary system, voluntary.
Correct. But how, the question is that from a global standpoint, I think there are reasons why Bretton Woods, in some people's eyes, failed. So that's Bretton Woods was basically when the gold back, at least not in Switzerland, but for the most part around the globe, basically stopped. And that was 1970. 71, okay. 71, very good. Somebody knows about Bretton Woods, cool. So the question is I think there are people that are on the side that made sense for to put it into more tech terms like we use today would be scalability. In the fact that obviously there's a lot of gold, there's trillions of it, most of it though is still in the ground. The fact that you need to actually store the gold, move the gold to be able to then asset back. Well, just let me hit my point. The point is that you kind of touched on the question, the question before, but you didn't actually answer the question of how a global deflationary currency can actually, how it works in times of crisis. That's the main question.
I mean,
without a centralized monetary
I think there is from my understanding, something which is wrong in the question, because I know no economist who believes that there's going to be one deflationary currency in the future. Not even Hayek was of that idea. What we want to see is a competition of currencies. So even the biggest Bitcoin maximalist doesn't want to abolish or stop any national currency. So and I'm not believing that there is any scenario in the future where we're not going to see today's national currencies. They will all still be there. So we're going to have the euro, we're going to have the US dollar, we're going to have the Swiss francs, but we're going to have a private competition, and a competition increases the output of a market. So we're going to have a competition which is a very, very stable, uninflationary currency, whether it's Bitcoin or anything else. But on top of that, we're going to not lose any of the national currencies. They're going to be there, and they can be inflational to a certain extent, which is good and rational for the market. But they have to rely that they are not going too much into inflation because they have a strong competitor on the monetary market. But I don't believe that there's going to be one world currency. No, all the currencies going to be there, but there's going to be an additional competitor on the monetary market. Whether it's Bitcoin or anything else, we don't know yet.
Perfect. Anybody else want to?
I could be showing my weakness in economic theory here, but from what my friend was saying earlier, I think there is a theory that as long as productivity is increasing, a deflationary model can work because you're always getting more for less, right? So that's how things work in tech. We essentially keep increasing processing speed, and we do it for less resources and energy consumption. So I don't know enough to expand more on that point. Maybe you can, but I'm pretty sure that in this model where you have productivity increases, it doesn't necessarily affect the base money or what's underlying currency supports it.
Good point. Okay, we have 5 minutes. We can. I think we should scan the room for some questions first. If not, we'll throw maybe 2 more questions at the panel. If anybody has a question, I think so. We don't go over time. No questions.
Thank you. Someone see any country, especially those that have some kind of blocks? No, they are outside of the SWIFT, like using cryptocurrencies to import goods or export services, like in the next year or so. It's like something that happens soon.
I think there's already been precedent set for that, actually. I think Australia and it was in a Southeast Asian country. Off the top of my head, I'm not going to. It was on the Ethereum blockchain, actually. It was a settlement of some trade finance deal between the 2 countries. I think there's already been a bit of precedent there. But.
I guess just to expand a bit more, I'd ask, are you talking about government entities, or are you talking about private industry?
For example, I am from Argentina. In Argentina, we cannot import a lot of things, but not because policy to protect the national industry, which is debatable. Mm-hmm. It's because we don't have dollars anymore. We are broke. So even if you want to import, you will deny once you ask for make the payment. That it's basically ask the dollars to the central bank. But if I am attaching Bitcoin payment, they don't care because it's like paying with World of Warcraft money or any other thing for them. So it could be for private, but do you think it's going to happen like in national level, countries starting to accept cryptocurrencies to avoid certain international sanctions or so?
I think I heard some mentions possibly in Russia about supporting it, but I don't think I've at least heard of it happening yet. But I can tell you for sure on a large scale it's happening privately, especially in countries which have difficulties to move currency out of the system, or you need to have permission from the government to move currency out of the country. So one thing that I can say we've seen in our biggest market in Nigeria is that people are basically using Bitcoin and crypto for import-export. So in that country, if you have an industry importing cars and you buy second-hand cars in Europe and ship them over, you don't have a way to make a payment for SEPA unless you have a connected entity somewhere, which if you exist in Africa in some systems, you don't have a financial system that will support you to send money out of the country. So these sort of deals are already happening big time. I think the biggest volume of Tether right now moves between Russia and China every day.
Okay.
People are importing goods, they pay in Tether, and they're just basically swapping. It's for sure a lot of use cases happening right now.
That's interesting.
And this is just an example of the monetary competition. So if SWIFT network decides that certain countries, several of them don't have access to SWIFT network, the alternate means. Perfect.
Yes, I agree that. And the mass adoption of crypto for cross-border payments, it depends on the successful use cases. Like if you see some good examples in Russia or in China, so you can then scale, and countries needs to be somewhat accepting about the fact that it is making the population, or it is making the service easier for the customers. So it's good, yeah.
So we speak, I just wrote in Telegram, so we speak a lot about Facebook and Libra. not right now, but we haven't spoken like much about PayPal and PayPal money because that's not a legal currency either. And now there's Telegram too, so the Telegram coin. So they are already shaping the new financial system, I think. So in some way with crypto, or like PayPal not. So what do you think about that?
So good that you mentioned PayPal in relation to Telegram or Libra. When PayPal started, they had the ambition to become a global payment provider. Finally, they ended up with serving 42 markets because they found out that it's almost impossible to comply to the regulation in every single country in the world. So they managed to, well, serve 42 markets. I doubt whether what is called Gram or Telegram or Libra will be more successful. I mean, the reason why we do not see a real global bank or why we do not see a real global payment system yet is because, well, it's just too complex to fulfill the regulation in each and every country. You would have to have representations in most countries. And neither PayPal managed to do that in the last 10 years, and I doubt that any cryptocurrency will be able to do that.
And even under the regulation, there's certain countries you can't do business in almost period because they're simply cut off from the rest of the world's financial system.
Yeah, that's a good point. So maybe we have to try it on international, like United Nations level.
Just to add one point, you talked about PayPal. PayPal is now exploring their new market opportunities. They just recently signed up some agreement with Alipay, and they get a license in China. So now they are exploring different opportunities because as we see that now, in this day and age, we see a lot of competition with TechFin, with also Fintech players. So every industry or every Fintech player is exploring new opportunities, how they can scale, how they can provide better user services.
I guess they have no choice, right? That's what Fintech's all about. It's about pushing incumbents to actually move and make a change. That's what you're supposed to do. And try to make money along the way, I guess. That's usually a goal as well. Any other questions? I think we're just about at 30 minutes. No? Somebody's got to have a question. Come on, guys. We got decent guys here sitting on the panel. They need some more questions. Nobody? All right. Well, at least we're on time. We can applaud ourselves for that. So, thank you, everybody. Thank you for all the speakers. I think it was a good talk.